Welcome to the Trading Lounge and the day-ahead report. The US cash markets were closed last night. Other markets were trading, and also the UK markets ended up in positive ground. And here we're looking at the US 30 here as the CFD, and continues to push to the upside. The target that we're looking for up here is the 650, and that's playing out now. Once this is support, we can expect it to move higher. In terms of larger targets to the upside, the trading levels, the levels are 300, 500 and 800, so we'll be looking up here further. When we're looking at the daily chart for the Dow Jones, we can see that the old highs in October in 2012 haven't been taken out yet. They have been taken out in the S&P 500, and the Nasdaq is still lagging somewhat as well. So when we have a look at the Nasdaq here, we can see that just the daily chart here, that we're still behind here. It doesn't concern me that much because the Nasdaq can normally lead in a bear market going down, but not so much in the upside market. Normally, the leader in the upside market can be the Dow Transports, which we've kept an eye on here for some time through here. So they've taken out their highs here, and also have taken out their highs from 2008 as well. So 2008 through here from the large bear market through here. So it is leading to the upside, and as I mentioned before, this was a corrective pattern through here, so it'd have to break to the upside off the support of the major trading level here, 5,000. So the accumulation process through here is still squaring up time and price here, so we can still expect that to move up to the upside. The S&P 500, which is a broader market than the Dow and a little bit more sort of useful. As you can see here, it hasn't taken out its 2007 high as such. Just bring that into focus here, as such here. But what it has done in the short term, and reasonably important, it's taken out this particular high here where the Dow hasn't. So it's been a leader through that sort of area there. We know the next largest number is the medium level here, the 500 here. So that's our target at that point there. So that's where we can expect that to have some type of correctional pattern through here to slow it down a little bit. Our wave count, of course, is much further up, so long term up, short term to medium term having problems here. This will obviously reflect back in the XJO here at the minor trading level, which is trading level 8 here, which is, we call it a profit-taking number 8 because it's normally the first even number before the next whole number. The All Ords are already here at the 4,800. So we can, once the cash market here gets there, we can expect that to push a little bit higher actually, and then have a correction across here. And of course the leading stocks will create that, so the BHPs and the CBAs etc. will be working around their closest largest numbers as well, so sort of bear that in mind. For day trading, just have a quick look at the European markets because they're the ones that traded slightly up. We're looking at this for the DAX here. We're looking for this is a 2-hour chart, looking at this being a corrective pattern to the downside, an ABC, and that's correct. That was played out well. And now we're looking at an impulse wave to the upside. So nice strong third wave here, fourth wave here. We'll be looking for a move above there. You want to be looking at the sub-levels between each 100 points here. Once again, 8 is a profit-taking number. This is why we're seeing it take out through here. So the sub-levels, the next degree smaller, would be the 10, 20 and 30, then the 50 here. So the midpoint here, the 77.50, would be required as support before you can move up. There will be stronger profit taking at, I've got that, just bear with me here, got it here further. Okay, so I'm just going into a 15-minute chart here. So as I would have mentioned the other day, that the most important number here in this group 1 here, 10, 20, 30, would be the 72, the 20 in this case. And the next one that's going to be strong is the 7772 up through here. So, but either way, of course, as you're trading from top of group 1 to the midpoint, always expect a correctional pattern to unfold there, so you have a choice of what to do. But if you're waiting that out, then be looking for support on the midpoint to add positions, start scaling out into 65, all of it at 72. If support becomes available at the 72, then scale back in on the 72, the 80, and start scaling out on the 90 and into the 78 there. The FTSE to the upside would be looking at 62 here. As I pointed out before, the 618 here is in geometry, is the golden mean or the golden ratio. So we can expect a larger correction across here, a little bit like the euro at 134, 34 being a Fibonacci number, and that's playing out as well. Sorry about that. The Australian market here, you can see that it's in group 2 here, and it's this pattern through here is corrective, but any long trade from this point would be looking for support on subgroup 2 and the 772 there. Just drilling into that a little bit closer here, you can see on the 1 hour chart, you can even drill in for, you need that 72 as support before going long. As simple as that. Otherwise the market is exposed to risk to the downside. So bear that in mind, and we will see. We are seeing metals in a stronger position, and but short term they need to retest 365, or in copper. Let's have a look at. Looking at the copper market here, it does seem reasonably positive for 2 reasons, well 3 actually. First of all, the move down through here is in 3 waves. That's corrective. That means that that's a bullish corrective pattern, so we should see new highs above here, but a bit reluctant to sort of call that in just yet. But what we do have is that this move going up through here is an impulse wave. It's in 5 waves, very small, but 5 waves there with a strong 3rd wave in the middle here. So that means if we get 5 waves in the opposite direction after an ABC correction here, then we should see another 5 up. So, but that will only give us 3 up, as 1, 2, and 3 is another ABC. So we have to be careful about that. This 61.8 here is because of this distance here, but this 5-wave structure up here should have a 61.8 retracement level of around the 363 there. So it's plausible for this to move back down to here in a 3-wave structure before moving up there further. This is, but it is positive on the 4-hour chart here, so we should see more. In relation to copper's obviously governing the material sector to some degree, and the Australian dollar. So this is the material sector here in Australia. This move down through here is looking at a 5-wave structure. So essentially we'd be looking at this from this high up here, we'd be looking at something like this here, maybe not so far down as that, but something of that nature there. And this would be, this move down here would be in 5 waves. This one here would be in 3 waves going up through here, and this one here would be in 5 waves as well. Once that's complete there, then we should be able to see a move up there. This is happening across a minor trading level, which is 10,800 here, so that's playing out through there, as will the ASX 200 across the 4,800 and the S&P 500 across the 1,500 there. There is another sort of weaker count on the Dow Jones that I do want to mention actually. If the S&P 500 plays out quite strong, so this is the Dow here on the daily chart, and the coming into these highs here, if there was a reversal through here as such, which is quite possible because of this 3-wave structure here, so we would see a move back down through here first before we see another move to the upside through here. It's just an alternative count, but we won't go quite there just yet. This is it here, so we'll be looking at more of a triangle pattern through here, an Elliott triangle coming into play there. So it is plausible coming into this high here. It's just not there just yet. So let's just, but I need to put them on the table anyway. So So positive there. Okay, so the oil market, still looking for it to move above the 96 here, so we can consider this a wave 4 and a wave 5 up through here. I was looking this morning having support on the 95.72 as the long trade up, but look, there's not a lot here. You know, it's going to struggle at the old highs here at 96. It's also going to struggle in group 1 here, 10, 20 and 30, and its job is to hold the price to the closest largest number. So as always, we don't take the breakout, we take the retest. But this should give us the first high above here and then come back. The target to the upside is 96.50 there. The gold market is a bit of a rock and a hard place. We're expecting it to move up a little bit further there. If we just have a look at the bigger picture here for a moment on the daily chart here, we've got this trend channel coming through here. We do have resistance coming through into the 1700 here. The problem that we have here is that the move down through here is a corrective pattern as such so far. So we've got an A and a B and a C wave down here, and that fits nicely as an Elliott zigzag, a 5-3-5 structure to make the C wave of wave 2. And as I've mentioned, when this low came in here, we'd need to see this push up through here. The pattern that it's creating up here, the structure and the form, is not that clear as a impulse wave to the upside. It can be counted like that, but it also can be counted as a corrective rally with overlapping structures in it. So we have to be mindful that it can fail sure, it can push up above the 1700, but being above the 1700 is not such a big deal, but the retest, and if it develops support on the 1700, then that's a positive step, and we can move in with that. But it can fail, just poking its head up above the 1700 and failing there, and then moving further to the downside. So that's on our mind at the moment. So we just need to see this area here play out somewhat. So just not that sure at this stage here, but this little pattern here is corrective, so we are expecting it to move up a little bit further. But the reason I'm saying this for is the corrective aspect comes in because of the overlapping wave structures. It basically means that that this low here and this low here is overlapping this previous high here. So that creates the overlapping wave structure. It also can be counted as a very strong point actually too, in terms of up for 1 here, then an A, and then a B wave coming up through here in 3 waves, and then the C wave coming down here. So basically up for 1 here, across for 2 here, and then the third wave displaying up there. And that's possible too, because it is displaying the personality of a third wave, which is the strongest wave in a section. Like this is the third wave here, so coming down, so we've got wave 1, wave 2, wave 3 here's nice and strong, where the most volume comes in because people recognize the setup, and then wave 5 here. So it is displaying that, so it is plausible, but just difficult to find an entry. As I mentioned here, the entry would be, the first step is the 1672. So if you're long there, then you may be able to build the trade up here. We just don't have enough evidence so far to give to you to prove a stronger case. There's still the possible case of this being a rally, so we just need to allow this to play out, and it's not going to miss much. It's not going to go very far here. 17 is going to really sort of cap it in here, and we'll see a corrective pattern across here. After the corrective pattern, or if it is a corrective pattern and then develop support on the 1700, then we know we're going to be going much higher, and we'll be able to move in from that point. All right, let's have a look at Forex, as the US dollar is just completing its rally to the upside. The US dollar here, we're just still tracking this corrective pattern to the upside through here. We've got this little A, B and C here for the A wave, the A, B and C for the B wave, and we're looking for the C wave here, which should be in 5 waves, the wave 1, the wave 2, the wave 3, the wave 4 and the wave 5 here. So we're still looking for another little new high to come in through here, but once that's complete, then we should see that move down. Now, once that starts to move down, then we're going to see the Australian dollar, the euro, commodities push higher, and also stocks as well. So that's a real positive there. This is the US dollar on a daily chart here. We can see that that we've got a bit of a triangle pattern happening here, and a triangle pattern in Elliott terms is 5 waves. So it's the 1, 2, 3, 4, and 5, which is basically counted as an A wave, a B wave, a C wave, a D wave, and an E wave. And that's what we're sort of looking at now through here. And once that's complete, then we'll see further downside. So what we're sort of looking for here in the bigger picture, I guess, is we're looking for the 80 here to become the retested resistance. So it's popped its head up through here, which is a positive sign. But as mentioned before, the breakout is important, but the retest is more important. So if that retest fails in here after it's completed that little 5-wave structure up there, and it eventually finds the 80 here as the resistance, then you know that stock will be stronger and positive to the upside, as will the currencies and the commodities as well. So in a very simplistic way, we're looking and waiting for the 80 here to become the retested resistance, and there's a little bit more to play out in that here. Now this could just push straight through down here as the US Swissy is kind of leading the way, but if you're looking at that market, you'll need to see a break of 93. And then that would send that to the downside. So we basically just need to wait here. So until this completes here, we're not quite sure if we get one more here, or this is already done in here, and we get a move down through here. So when we look at the euro in the reverse to that, this particular pattern through here can quite easily just move straight up from here, and that would be the A, the B, and the C for wave 4 completed here. Or we've got one more push down through here as the US dollar pushes up, and then we go up through there. So the way to handle that is that because the price is in group 1 here, we need to wait for the top of group 1 to become support. So the 13330 here, the top of the 30 there needs to become support. You could move in on top of the 20 here. That's a possibility. So I'll just sort of leave you with that, but that's sort of risk. Yeah. So a bit the same with the Australian dollar as well. So when we're looking at the Australian dollar, we're looking for this move down through here is corrective because it's got overlapping wave structures. It could turn into a big impulse wave to the downside, but we won't go there just yet because we would need to see a strong move to the downside, and we would need to see this subgroup, this support here, basically taken out through here. So let's just wait for the US dollar to make that turn there. This little pattern in here does look corrective because we've got overlapping wave structures in here, as you can see, but there could be another push higher through here as well, because it's in that bit of a trend channel there, as you can see here. So on a smaller scale here, this is it here on a 5-minute chart here. The if you're scalping, if the 105.20 becomes support, then expect a new high into this area here, which is quite plausible. And the reason that I can say that is because this little move down through here is in 3 waves, so that means that high there should be taken out. So this particular rally that we're looking at here, and I'm calling it a corrective rally because it's got overlapping wave structures. So this low here takes the top of this one out rather than being further up here. So it's got that corrective move to the upside, but in that this little pattern here is corrective. That means that high there can be taken out. So you might be able to find yourself a way in there. If I just drill in there a little bit closer while I'm here, just have a look at this little bit here. So it does appear that we've got 5 waves up here, the 1, the 2, the 3, the 4, and the 5. So this may not be 3, 4, 5, so it should push up a bit higher. But once it's done that into the 105.20, we should see a reaction from that point there. So if I just bring that up there, so we should see 5 waves up through to here somewhere, then an A and a B and a C. And if you see that clearly, you'll only that 3-wave structure there will only be 3 waves once this the low pushes in back up through here. So yeah, anyway, just track that, and that's that. So look, just recapping a little bit, UK markets were slightly positive. Everything is slightly sort of positive. Obviously the US market, cash markets were closed, but the general stock market in the US is in a positive mode. However, the 1500 for the S&P 500 can create stalling in the market, but we know that cash reserves are diminishing, which are moving into stock, into equities. So we know that there's a positive volume moving into the equities. It's just a matter of navigating the closest, largest numbers. And in Australia, we've got that 4,800. We can see that that the materials sector, the BHPs and the Rios and so forth, are going through the first leg of a sideways correction, which should be in at least 3 legs, and that would coincide with the All Ords moving and the cash market moving across the 4,800. We can see the leading banks like CommSec have had their run. We can see the other banks, Queensland, NAB and so forth, or NAB's selling UK interests. So speculation moving that to the upside, but the followers in the finance section are doing just what they're supposed to do, and creating late trends as followers. So yeah, the main point is that there is good trends out there in terms of robo trading. We just need to be careful, because we know that the CBA, BHP, the leaders there are correcting sideways, so it does create choppy an environment there, and it's just something that we need to acknowledge. Less is more in terms of capitalization, trade size, and position sizing, and so forth. So just be a bit patient. There's trends and corrections in a market, and we're basically in some small corrections, and we need to lay low until that's completed, and we can use those corrections once they're completed as the foundations for the next trend. So nothing much we can do about that. We just have to be humble and patient, and eat our pie when it gets put on the table. Good morning, good luck, and enjoy the day ahead.